Hold up, Lawyer Steve. I thought the assets were going to Mom through a trust. I thought to qualify for the marriage deduction, the property interest passing couldn't be a non-deductible terminable interest.
It's Mr. Nim. Whatever. You're right. However, Internal Revenue Code, Section 2056B7, provides for an exception if it's a QTIP property.
Are you guys talking about QTIP property?
You lost me there.
Don't bother. It's his DJ name.
I finally figured out why we never have Q-tips at home.
QTIP!
As Alexis just mentioned, a property interest passing to a spouse can't be a non-deductible terminable interest to qualify for the marital deduction under Internal Revenue Code Section 2056. For this purpose, a terminable interest exists when an interest in property will fail or terminate upon the lapse or on the occurrence or non-occurrence of some event or contingency. The most common example of a non-deductible terminable interest is a transfer in trust, which provides the surviving spouse with an income interest for life, followed by a remainder interest in third parties, typically children. However, there's an exception under Internal Revenue Code Section 2056B7 for qualified terminable interest property, or QTIP, no relation to the DJ. To constitute QTIP, property must meet 3 requirements. It must pass from a decedent. The spouse must also be entitled to all trust income for life payable no less frequently than annually, and no person may have a power to appoint any part of the property to any person other than the spouse, unless the power is a testamentary power. And finally, an election must be made. QTIP and the estate tax are complicated, so consult with your tax advisor to learn more.